Good afternoon, everyone. It's been quite a while that we have not done any webinars, and we thought we'll just let the market stabilize a bit, and then have some more data coming in, and then we do a webinar on things like TMS and TDS, as well as in that portfolio management kind of a thing. See, we try and keep trying to repeat the whole point that you have to have a portfolio of strategies. And that is what we always emphasize on, and we are extending it in the same direction. So I think quite a few of you have got access to TMS and TDS, and you've seen these strategies. TMS is theta must straddle, and TDS is theta dynamic straddle. There's a version of theta dynamic that we've created, which is theta dynamic directional. So all of you have that, and with that understanding, let's start the session. So as you know, we have four major quadrants of strategies, which are positional, intraday, and non-directional strategies. And under these quadrants, we have got four segments, which is gamma, theta, zeta, and delta. Gamma is the buying, theta is the non-directional or straddle triangles. Zeta is directional selling, and delta is positional futures and other strategies. When we talk about theta series, what are our basic principles is for us, theta is completely non-directional. Sometimes it will go directional, but mostly it will remain paired. Theta strategies. Sorry. So that's what theta does. It is to complement our high risk, high reward directional portfolio. I think all of you, know us for directional portfolio, and many of you have subscribed to our directional strategies. So I hope everyone is, any issues in anyone joining in, Vikrant, just let me know. Right. So, okay. Let me just go back to this. So you all know us for directional strategies, and be it ZIP, be it GMP, but we have eventually we are also trading for ourselves. So we have a non-directional portfolio as well. And that is what we are trying to talk about today. This non-directional portfolio helps us to smoothen the return curve, and they are scalable as well. Unlike a buying strategy, you can scale it up to a little, 3-4x per deployment, but beyond that, we need theta strategies to give us a consistent return. They try and have lower drawdowns and more consistent performance than directional strategies, and also because they are intraday, that removes the issues of a positional strategy getting into a wrong position and losing out, returns on that. Apart from that, when we talk about how we segment the strategies, I think all of you have known that we've been segmenting into core and non-core strategies. So in core strategies, we have theta must straddle, we have theta dynamic straddle, we have theta dynamic directional straddle, which is basically TDD. It is based on TDS, and we have a theta retail straddle. We have a non-core portfolio on the theta series as well. One is the scalper, and another one is theta ka zeta. We're not going to be talking about many strategies here. We're going to be talking about three strategies: TMS, TDS, and TDD. Rest we will take up in later webinars. So when we talk about these strategies in focus, so TMS is basically a always pair strategy which rolls basis price action. There is a hybrid signal between an external system and tradetron. It is a single counter strategy. What do we mean by a hybrid signal is that there are certain signals which come from external system which trigger it. Tradetron based system is where the PNL based rolling or PNL based shifting is required. Whenever that happens, when there's a price action based shifting that comes in from an external system. There's an open target, and there's a 4,000 rupees SL. We have an average trade of 250 trades that are there per month. There's a separate Nifty and Bank Nifty strategy that is available as well. TDS is an always paired strategy which rolls basis SL, TSL, or a legwise SL. It is a multi-counter and also has a filter to take a trade or not take a trade. In many volatile situations, it'll actually not take a trade at all. And that gives it the character that it has got. It has a target of 2,000 rupees or 1,500 rupees per counter. So 1,500 is a target for expiry, and non-expiry target is 2,000 rupees. SL is 3,500 rupees for non-expiry and 2,000 rupees for expiry. It has an average trade of 700. It is on the higher side, but it's a completely paired strategy which keeps on rolling on multiple counters. So that's why the trades are high. Then we've got theta dynamic direction, which is actually based on TDS, but it takes a semi-directional look and to the strategy. So instead of ruling if a direction is confirmed, it will basically take the direction. This will happen only in specific cases, and it doesn't, again, as we try and do, it will remain paired most of the times. There's also a multi-counter strategy, but the target is wider and the stop loss is smaller, which makes the number of trades less as well with the leg cutting that happens with this. So that's basically the three strategies that we have. When we again compare them, these strategies this might be much better, right? So when we compare these strategies, we see that TMS is a single entry. It rolls 2 times. Any index will roll 2 times here, while TDS and TDD will have multiple entries. TDS rolls always. TDD might take a semi-directional position on the strategy. Eventually, any paired strategy is nothing but a rolling strategy. It rolls at different times, and that's how the strategy is able to remain paired, because it is rolling in the direction of the trend, or it is rolling up, or it is rolling down, or it is staying the same, or it is rolling because of the decay has happened in the strike. So that's how the any, let's say, always paired strategy works. And that rolling strategy and the paired strategy has this advantage, which is lower drawdowns in that sense, because a semi-directional strategy like TDD could have a drawdown of 5%, 7%, 5 to 7%. In TMS and TDS in live data, we have seen 2 to 3% drawdown. So that's how the difference is. Again, this is a very standard thing which we talked about. All these strategies have capital requirement of 320 K, or which is 3.2 lakhs, which is including buffer and everything. Most importantly, one thing is that TMS takes normal orders and rest take MIS orders. Normal orders because it tries to take the decay to the end, while TDS and TDD will be more of decay towards the during the day. I'll let you guys ask questions, but let me just finish the TMS and TDD part, TMS, TDS, and TDD part, and explain the strategies. So if you see this, performance of TMS, there's all this data is available on the Excel sheet, so you can actually check and verify this data. You can analyze this data for yourself. But what you will see is that TMS has been a very consistent performer. It is a lower drawdown, stable performance strategy, which has worked in very highly volatile markets. I think May, June, July were very volatile, and all of you know it. We need not, give more explanation on it. There is, because the advantage of a paired nature is that generally there is minimal, differences between deployments, because the leg will not get cut. So that advantage remains, and a lot of people have applauded us for that. That's just the system. We are not doing anything. It's basically the system which will not have major differences, because it will not, if it doesn't roll, then it would have similar P&Ls. The other point is also, TMS, we have been very, very categorical, and we have shared it with you as well. It will not have a backtest, because it has an, underlying system which is external. And that's why we are not able to do a backtest on it. We are trying to do things But right now, from a tradetron perspective, tradetron backtest perspective, there would not be a backtest. We have done extensive paper testing and live testing, and you guys are all aware of it. And I think eventually when you use the strategy, you will feel more confident on this. Uh, with this hybrid system, there's also an inbuilt PNL based tradetron system, which will make sure that if in case there's an external linkage issue, which is very, 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 very rare, but exceptionally rare, in that case, the tradetron system will take over, and we'll not have a situation where the strategy is in a limbo. And that is what we are trying to do. That with the hybrid system, it takes a call. It will also take the SL basis, tradetron if a certain level is reached. Additionally, I think there's been an issue with TMS, which has been mostly on the low premium side, where last few expiries were quite tough. They were anyway tough for most strategies. But due to low premium, we have seen that TMS struggles because it doesn't roll as much. It's more like a rock, which is very difficult to, or heavy rock, which is difficult to shift in one sense. So that's how TMS's nature is. That will not be that agile, but it will make sure that a lot of things are calculated before it takes a move, and that is not a calculation based on premiums, but it is based on the underlying. And that's the reason why when we have low premiums and the VIX is going down, expiries can be tough for, especially directional expiries, can be tough for TMS. So we have done a modification on that on the expiry days, it's going to move to next expiry. And it has been implemented. We have done it previously on other strategies. TDS, we have done it extensively, and it has worked well. So we are hopeful that it will work here as well. As a strategy, it has an issue with extreme reversal days. Normal reversal days, it can handle well. So what we call about extreme is, let's say, Bank Nifty moves 700 points in one direction and then moves another 700 points in the other direction. That's something which, it will not be able to take care of. But 200, 300 point move in either direction, it will be able to take care of. So that's for TMS. TDS, it's actually a very one of our oldest strategies, which has not, seen much of changes and has performed specifically with, all the, let's say, market scenarios that we have seen. So TDS, has given consistent return in all kinds of market scenarios, be it high VIX, low VIX, rising VIX, declining VIX. But it is a multi-counter, rolling strategy. So it will roll all the time. It will roll most of the times, and it has the advantage of rolling at the same time. In let's say very directional markets, it'll actually get the advantage of theta decay as well, because it'll keep on rolling to the other strikes which are more concurrent to the market, and that's how it works. We had some changes in this, which was before 1st of Feb. We used to do future strikes, and we used to trade on next week Thursdays. And then since 1st of Feb, we moved to spot strikes, and we moved to current week expiry on all days. So that's a difference that we did, but that was driven more from data as well. And then we decided to finally improvise the strategy in this way. So it does high trades specifically on expiries, and let's say when market is moving a lot. So that's when the trades go up, and it is recommended only with free brokers or above 10x with traditional discount brokers. Traditional brokers meaning discount brokers. So only if you do 28 above 10x, then you should do the strategy with Zerodha or any other broker where you're paying 20-25 rupees per lot. TDD, we don't have a live performance of this. It's more of a let's say a backtest performance, because again this is a strategy based on TDS completely. So this strategy will take a direction instead of, let's say, not taking a direction. So what TDS does is, if it senses that the market is directional and it has entered a position, it will either take a profit or loss, and then it will stay quiet, and will enter once the direction has, direction is not there. In TDT's case, it will actually take the trade, exit the leg which is favoring the direction. So if the market is moving up, it'll exit the call sell and it'll keep on the put sell. So that's what TD does in this case. That's why it doesn't have that filter which will say that you should take a trade or not. So that's a basic difference between the two. Otherwise, a slight difference on the P&L that is there, because again it's a more of a strategy which will remain more in the market. So that's how it'll differ, and it's a kind of trying to take advantage of both the sides. Let's say a directional as well as a non-directional side, or let's say when the market has gone in extreme, when market goes extreme directional, it also will try and take advantage of it. So it's a slightly riskier strategy than TDS, but it has lower trades. I think that's what people have been asking us for. It has to have lower trades. So that's what it is. Around 350-400 trades is what we will have here. Generally, when the VIX is high, then the trades would be higher for the strategy, again because it depends upon the P&L targets, and it does very, very well on directional days. And as per backtest, it actually performs very, very well on tough months where all other our non-directional strategies faced issues in terms of results. So it will work very well on those kind of months, primarily due to trying to take a direction aggressively rather than rolling into next expiry or other strike, or taking a counter like that. So that's one difference that we will have in TDS. It will again have a slightly higher drawdown because of the semi-directional nature, and the problem it could have is can get caught into the volatility and quick reversals, which happens with any semi-directional strategy. So after this, I have got stats to talk about the combo performance and everything. But I would like to take some questions. If you have any questions, you can raise your hands. We'll unmute you, and we can take those questions, and then we can move to the strategy combo performance. Hello, sir. You can unmute yourself.
Oh, okay. Vishal, quick question. So
Yeah.
You mentioned in TDIS you made a change in April to go back to current week expiry, right?
Yeah.
But you introduced that same concept of next week expiry in TMS now.
Yeah.
So you made that change to go back to current week expiry from next week expiry on TDIS due to a different reason?
I'll explain.
Yeah.
So TDS, there are two aspects, right? TDS will aggressively roll, and it tries to capture the decay more aggressively than TMS. TMS is more like it will stay with that position till the point that it has got a confirmation that we are going to move in this direction. So that's the basic difference. Now, why we moved in TDS was because we realized that with a dynamic strategy which is keeping on moving, it is it will actually capture better decay on expiry, and that's why we moved to the current week expiry in TDS. While in TMS we were realizing because of lower VIX we are having issues in terms of capturing the decay, and that's where we understood that this might work better for TMS. So I hope this answers your question. The idea is to, every strategy has a different nature, right? So we are trying to adapt certain things to certain strategies' nature.
Okay. So is this more to do with the signal generation part where it's coming outside of TT? Whereas in TDIS, you are generating the signal within TT, so the parameters are different? That enables you to use
nothing like that. I think in TDS the idea is that once we have 1,500 rupees decay, we will exit the position, right?
Okay.
In case of TMS, that's not the case. TMS is not looking for a P&L target as such when it's trying to change the position. It is looking at the market's behavior. That's coming from an external system.
Okay. And
So
you're
it's
doing.
basically,
Sorry, go ahead.
yeah. So it's basically each and every system has a different way of performing in the market, and according to that we choose. So what? Why did we choose the next week expiry? It was very clear that when you have where the premiums are low, even if the strategy's decision to stay with the strike is right, because the premiums are low, you get actually a skewed performance, and you get SL hit.
So you are reducing the gamma impact. Is that what you're
Exactly,
trying to do with that? Okay.
exactly. In TMS, we are trying to reduce that.
Okay. Okay. But TDIS, you
Because
don't have that issue because you exit sooner, and so
exactly,
before the gamma kicks in.
exactly. We
Okay.
exit sooner. So TDS is like, so there are 2 or 3 types of exits in TDS. So I think most of our strategies you will see there are 3 types of exits. One is a penal based exit. Another is a leg wise total premium based exit. There's a leg wise SL based exit, and then there is in one sense you can say an exit basis a filter as well,
Okay.
right?
Yeah. I
So
mean, we don't have
sometimes.
to get into the technicals of how you
Yeah, yeah.
exit because
I'm
that's
just
your
trying to
IP.
explain
So
what I'm
yeah.
trying to what I'm trying to share is that the performance of a strategy and the nature of a strategy, right?
Okay.
Both are different.
Okay.
So when we say we understand the nature of the strategy, and then we understand, okay, there's a problem with this performance, but the nature of the strategy is right, then we do something else in this, and that's where we have gone to TMS, where we have gone to the next week strike to improve the performance, because the nature of the strategy is still correct, it is still performing, but the strikes are not performing for us.
Okay. Okay. But the question is I would say the premiums today, I mean, with the VIX running at about 20 plus now, right? So that's actually
Yeah.
let's say, historically higher VIX range, right? If you look at the last 4 or 5 years, maybe, if you look at last year's July, August, when it was around the 12, 13 levels. So TMS would have an impact even on Wednesday then?
No,
If
not
at all it
really.
slips down to that levels of sub 17 on the VIX.
I think the problem today is not only the VIX. The problem is that the VIX might be 20, but the behavior of the premiums, I'm not talking about the premium levels, I'm talking about the behavior of the premiums. The way the premiums are going up and down, it is as if the VIX is 35.
Okay.
Because the kind of volatility that we are seeing with low VIX, that is the reason why so many people are trying to uh, are actually feeling very difficult markets, because I mean, ideally week 20 weeks market is a very good market to work with for an option seller, but
Yeah.
you're not able to work as an option seller because the gamma effect is so high, the intraday volatility is so high. So all these things are contributing to a VIX 35 in sense of how it feels. So it's like, in weather you have this, what is the current weather and what does it feel like?
Yeah. Okay, got it.
So it is
Yeah.
current weather is 20 weeks, but it feels like 35 weeks.
Okay. So the intraday volatility is making things more difficult from a TMS strategy perspective that you're moving it towards the
Yeah, not
next
only
week
TMS. I think
expiry.
most other strategies as well. I mean, although I mean, we don't want to compare with everyone, but if TMS failed for 3 consecutive Thursdays, other strategies failed for 2.
Hmm.
So, I mean, almost every strategy is failed during these kind of expiries. So we have to, I mean, also understand from a environment point of view, where other strategies also getting affected. But having said that, we also look into it again. As I said, the character of the strategy and the performance of the strategy are different, and
Yeah.
in between is the strike prices, right? So if it is, we understand that a character is the same and character would work, and the strike prices are resulting into performance issues, then we try and change something on that.
Yeah. Got it. Got it. The one last question. So TDD
Yeah.
and TDIS are technically the same with more improved version in TDD? So you don't have to deploy a TDIS if you already have a TDD?
Yeah. So basically, we actually tried it to make a, like, let's say, improvised version, but eventually both. I mean, if you look into the data, both have a different nature. They turn out to be having a different nature, which is complementing each other rather than actually improving on the other. So TDS will still remain as a strategy which will give you lesser, fluctuations in P&L. At the same time, TDD improves on the number of trades considerably, which impacts your trading cost while giving you a similar ROI or slightly better ROI. So to answer this question in a way, if someone is doing TMS, ideally he doesn't need to do TDS
Okay.
because TDS is also always paid, TMS is also always paid.
Okay.
So TMS and TDD is a much better combo. And if someone is saying, okay, I don't mind having number of trades, I just want a consistent P&L and lower drawdown, then TMS plus TDIs is a better solution for them.
I mean TDD plus TDIS.
No, I'm saying if someone is saying that I want to have complementing strategies, I don't mind slightly higher drawdown over there because a semi-directional strategy might have a slightly higher drawdown, 2 to 3% more drawdown than a paired strategy. Then they can do TMS plus TDD.
Okay.
But if someone says I don't want to have drawdown more than 2 to 3%, basis live data we have, then you can do TMS plus TDS.
Okay. Okay. So you're
So it's
sacrificing
basically
a couple of more percentage on the drawdown to get
yeah.
2-3 more percent on the other one.
No,
Or we get
so
the same
in
ROI?
case of, it's very simple. In case of TDD, you are accepting slightly more drawdown and getting slightly more ROI.
Okay, so do you have that combination of TMS plus TDD in the graph?
Yeah, you can do
So
that. I mean, right now, so we try and do these combinations on live data. So TDD live data is very limited, so we have not created that.
Okay.
But we can create on backtest. But honestly, we don't believe that we should do this kind of data on backtest.
Okay.
Because we have seen that backtest tends to differ a lot. From the live data. Although we have shown you TDD backtest because we don't have enough live data for it, but it's essentially the same as TDIS in one sense, a strategy.
Okay. Okay, got it. Thank you.
Anyone has got any more questions? You can raise your hands. So can I continue to the next slide if no one is raising hands? Okay. Any questions on the group? No questions on the group. Let me continue with this. So let's go on to this comparison. I think there were quite a few people wanting to know how these combinations work, and essentially this is what we want to also talk about, because a lot of you have been using Zip and GMP, and some of you have started using TMS as well. But it's essential that you have a combination of these strategies. Why? Data is there. I mean, I don't need to give any explanation much more than what the data is giving you. If you look into this cumulative ROIs that we have created for these strategies, cumulative losses and percentage positive days, you will see that generally, if you use a combo, you will have best of both the worlds in terms of ROI, as well as lower drawdown days and essentially good expectancy ratio. Now, what this expectancy ratio is, I think there was one of you guys who actually wanted us to calculate this, and once we calculated this, not many understood, but we wanted to explain it as well. It is a calculation which shows that what is a typical profit for each trade that is placed. This will calculate how many wins are there, how many losses are there, and what is the average gain on these winners. So if a strategy is winning more than what it is gaining losing, that will have a higher expectancy. And generally, for an intraday strategy, the expectancy is around 0.2 intraday straddles and strangles. And when you go to a expectancy of 0.5, you're going for a considerable high return system, which is which will give you higher return with a moderate risk as well. Because expectancy is like, the higher the expectancy, the better the strategy is. It is not a risk return kind of a thing. So generally, when you see a higher expectancy, the surety of getting higher returns is much more. This is very different from a positive ratio, because the positive ratio does not talk about how much is the absolute return. It actually talks about how many times it has been positive. So this is a very important number that you should look into while you're deploying strategies. And the best way to look at it is in a combination of strategies, because eventually you have a portfolio of 10 lakh rupees, 15 lakh rupees, 30 lakh rupees. You will run a combination of strategies. How this expectancy ratio will help you getting to that good expectancy is what you're looking at. So this is the data that we have with the expectancy ratios. You can see the expectancy ratio of 0.49. I'm just putting the mouse cursor to it. So this is 0.49 for TDS plus TMS. What this essentially basically means is that we are in a system which is giving good return consistently for us. And you can see this is a data over approximately 59 days of live trading between TDIS and TMS. Generally, again, we look into this combo as I said, it's one of the safest combos. So what does it mean is 100% of allocation is towards non-directional. You see a TMS plus ZipN, which is 370K kind of a portfolio where you're having about 20% allocation, 15 to 20% allocation into a directional strategy, and rest is into a non-directional strategy like TMS. So that will have the returns that we're talking about here, about 17% return over this 59 days as well. Then we have got a combo of ZIP plus TMS. So the ZIP N is a ZIP Nifty portion, and ZIP is the entire ZIP and Bank Nifty and Nifty. Here you see it's basically a 75-25 ratio in one sense, or more like a let's say 74-26 kind of a ratio of directional to non-directional. In this case, it is giving a good expectancy of 0.37. And generally, the riskier the strategy, the expectancy ratio will be affected with that as well, because it tends to have some drawdowns as well. Let's say your overnight strategies will have higher drawdowns, but despite that, even a good return of 15.5%. The positive days are much higher, but the expectancy is lower. So if someone will ask me what is a better combo, TMS plus ZipN is a better combo from data rather than TMS plus Zip. But if someone wants an upside to the thing, because of course Zip had a total drawdown month, so then this data will improve from in the coming days as such. So that's how it is. And then the last is quite aggressive portfolio. We've got about 60% allocation to non-directional and 40% allocation to directional. And as you can see, the number of positive days goes lower in this kind of a thing. Drawdown days increases, but your absolute return is much higher. Of course, this is across a different period. So instead of the 59 days that we were talking about, here it is around 72 days. This data is there, ZIP, TDS, and GMP. So it's a longer time frame, and the return is much. So this is how we can manage our portfolio by deploying different kind of strategies, and we are giving this data upfront to you. You can play with any of this data. You will understand this data in terms of what it can give you and how it will help you in managing your portfolio. This data again is represented in a graphical format. So you can see TDS and TMS combo, it's been generally a very smoother ride as such. Zip and TMS combo, again, quite a smooth ride. I think most of the portfolios except Zip and TMS are at their lifetime highs. And then we've got Zip and TMS combo over there. You can see that April, May, early May, where Zip had an issue. The entire portfolio is more of a flat portfolio. And then again, when Zip started recovering, it has recovered. So Zip was heavy on TMS when we are doing a 75 or 74-26 ratio. So Zip was very heavy on that entire portfolio. And then we have this aggressive combo, which again, you can see from a higher time frame, it starts from, early March. And then again, you will see that the returns are higher, but again, the directionals will dominate your returns, over a period where May, we had drawdowns from GMP and Zip. They were dominating the returns. This is what we can basically, infer from these, and we can make a portfolio like this for us. Anyone has any more questions on the strategies? You can raise your hands. Yes, Jaxie, you can unmute yourself.
Hello, do I hear you?
Hi.
Hello. Yeah, hi, sir. Sir,
Hi.
I just have one question regarding TMS, theta must the index straddle. So in current market conditions, it is working very well. I mean, it's actually very good because of the volatile moves and all. So in the forward, I mean, in the coming days, if VIX come to 12 to 13 or 11, 12, 13, like in what we have in previous June and July. So in that case, actually the premiums will come very low, even if the expiry is on Thursday. At Friday itself, the premiums will be very low. In that case, if it is any 50 points move in Nifty or 100 to 200 points in moves in Bank Nifty, then that itself is enough to hit the stop loss, and it will roll to next strike price. So in that case, normally there will be more 4,000 loss per day, as per my. My expectation, my whatever I study in the market, if the premiums is very low, so will the TMS will work at when the VIX is 11 or 12 because of the very less premiums.
Okay, so I think our understanding of premiums and VIX, needs to have a rethought in the current scenario. Today, VIX might be 20. The straddle premium might be 450 when we're coming to expiry or Wednesday, but the behavior of this premium is very different. Right now, what does a strategy do? A strategy which is running on premiums would actually face this problem much more than a strategy like TMS, which is running on the difference, or let's say the price action of the underlying, which is Bank Nifty or Nifty. So a 50-point move today and a 50-point move in a lower VIX direction, a lower VIX day, will almost be the same. And the question of let's say hitting the TSL, hitting the hitting the stop loss, when the premium is low, the stop loss will actually not be hit.
I mean, because of the gamma, one leg will go very fast higher, and one leg will go slow. So
definitely, you are right on that. Gamma effect, you are very right on that, and that's the reason why in a strategy like TMS, we have moved to next week expiry on expiries. Considering that.
On expiries, it's okay. What I am telling, even in the current week expiries, like if the if the VIX is 11 or 12, even the Friday, if we are trading for Thursday expiry, even at that time also the premiums will be very low.
No, Jaxie, this is how it works. The gamma effect is much more on the expiry rather than a few days before expiry. So as the theta effect increases, the gamma effect also, let's say closer to the expiry, because the theta will decay. So theta will not be able to balance the gamma.
Yeah. Because what I have observed from the markets is when the VIX is actually at 11 or 12, so whatever the prices of the options, now it is in Thursday. The Friday, see if the VIX is 11 or 12, whatever the options of the prices on Friday, now it is on Thursday.
I get it. The point which
It,
happens is that what happens is it's not about the what is the price, it's about the behavior. Ideally, what do we mean by option behavior? When you see an option chart, and if you see that option is moving from, or option is moving 100 points, while Bank Nifty has moved about 75 points. Oh, sorry, 175 points. That is a gamma effect, and that generally will be higher on only on a Thursday. It is not higher on Friday, Monday, Tuesday, Wednesday. It is not higher. It is higher on a Thursday or on an event day when the VIX collapses or when the IV collapses. We're talking about those kind of days.
okay.
So you're right. It might impact on certain days when, let's say, if there's a event, there's a budget day, while the premiums are not supporting that kind of volatility. Premiums are low, but we are looking at a budget, right? So an RBI announcement that day it will be impacted. But yeah, man, not every strategy will work every day, right?
Yeah.
So we have to accept it.
Yeah. See, the TM is, I'm very much attached to TMS. So I just don't be a drawdown phase. If VIX is coming 11, 12 also, I need to make it consistently. So that's what.
So again, another thing that I would want to say is, you guys are seeing our own deployments, how much we are deploying.
Correct.
If we are not concerned about, even if you feel that we are not concerned about you, which is not the case, we will at least be concerned about ourselves.
Okay, sir. Thank you.
So don't worry on that, right? We are monitoring all these things, and we don't take a decision basis, what someone has said to us. I think you guys would have known that a lot of people have accused of us of being very, let's say, stubborn and not listening to people. But we will take decision basis on data. We'll take decision basis some matrices that we see.
Yes, sir. Yeah, my whole point is very simple, sir. Whatever the strategies is working for our current market conditions won't work in the future. So at that time, aggressively we have to change the.
I don't agree completely, Jaxi, on this. We have had systems. So if you look at TDS, that has worked throughout. This period from September to June, July we have got.
Last 2
Now
years.
a lot of people feel that these are systems that are new. Yes, they are new in that sense of we creating them new, but the four of us that are there, we've got a lot of experience of the markets. We do a lot of experiments parallelly to try and see how our systems are working over the period. So TMS, you might be seeing it right now. Trust me, it has been in works for more than 7-8 months.
Yeah.
And
So
we've seen the data.
Yeah, the another myth what the retailers have is the operators will hunt the SLs of these strategy creators who are in tradetron because they don't want us to give easy money like putting into the tradetron conditions like that. So that is one myth we retailers is having. So how can you suggest?
So I don't have many things to say about it. But I have an understanding of how the SL hunting could work. Because I'm not a SL hunter, but what I understand how it will work. See, generally SL hunting will happen for systems which are very well publicized, which are known to a lot of people. Tradetron's 10 crore, 15 crore AUM is nothing. Right? When FIs are selling 5,000 crores, 10,000 crores, this is just a little bit of sale. The entire cash market is even much bigger than this. Right? Entire FNO market is even much bigger than this. So when we talk about the total market, it's not that people will come to hunt specific to Tradetron creators. the hunting will happen into systems which are very well publicized. A 920 system, for if you see the rewards for this year, it's not been as good as what it has been for many years. So what happens is basically people will stop using the strategy, will stop using the same ways of adjustment, and then the SLs will go away, because if it's clear that you're gonna cut the leg at 30%, that's it. Then you will be hunting. And that's why, when we say that our strategies, we try to do these things, we have 2 or 3 different types of SLs. What does that do is that will not, there's not like one matrix if that, okay, this is 30% SL comes in and then it will be cut. It is not like that. Right. So that's what we try and do. That thought that you have that, people will hunt you, there's no solution to that. You will always have that thought. I think most of the retailers always feel that the market is against them.
Yes.
But anyone who's working with discipline will realize how the market favors them. I mean, this is all live data. Jaxi, this is exact live data from our strategies. A lot of people left strategies in between, right?
Correct.
You should see what the strategies did after that. And there was a genuine drawdown with strategies.
Yeah, I'm just putting all the retailers' point of view that whenever they enter the strategies, if there is any two or 3 days drawdown, they are thinking that operators are hunt SL and they are moving to other strategies. That's again causing difficult to their in every month their portfolio will be very red. So these kind of issues are happening, so that I just want to address you that.
So you're right, but there's no way to address it. There's only way to address this via discipline, and via explaining people that discipline works. There is no other thing that will work in this market except discipline. I mean, we were just having a chat. People say compounding is the 8th wonder of the world. Actually, the 9th wonder of the world is discipline.
Yeah. Yes.
If you have discipline, you keep at it. You keep a combination of strategies. There might be an issue with one strategy, one type of strategy. So super trend based strategies were getting hunted in May extensively, right?
Yes,
huge drawdown.
Yes, correct.
But they are back. They're working again. Yes, to survive that period, you need something else. And that something else is a portfolio. That's what we are trying to explain people. A capital allocation and a portfolio based, of strategies is what will help you drive that period. Not moving to a new strategy, not us changing the strategy, but a combination of strategies is what will help during that period. Otherwise, retailers will keep on losing. Honestly, there's nothing else that I can talk about. In fact, another thing that I will say is during, I think, first week of May, a lot of people deployed ZIP. What we saw was approximately 25 to 30% people did not renew their tradetron subscription.
Okay.
After experiencing that second week of May issues, which was a drawdown, and so people come in with return expectation, but they don't understand that they need, for a return to be consistent, they need to have a combination of strategies, and there could be drawdowns anytime. And that's what we try to explain again and again, try and spend time on it. Because honestly, this is how we have improved as traders.
Yeah, in this case, actually the people is having with less capital, and those who are actually relying in with one strategy, they are actually suffering a lot. So,
and we are very clear. We don't advise people to do anyone to do any strategy of FNO strategy if they have less than 5 lakhs capital, and position strategy unless they have less than 10 lakhs capital.
Yeah, this must be included in the description, because I mean, I just a thought, that's it.
Yeah, we can try and include that, but even in that case, people will not listen to it. Honestly, so yes, we can try and do that, but we can leave it to people to decide for themselves.
Okay, hi, can
Ali, you had a question?
Yeah.
Yes, Ali, you had a question?
Yeah, I had a question. When I'm speaking to
Vishal.
Vishal, hi Vishal. I'm Ali from Hyderabad.
Hi Ali.
So I have been using another
algo trading platform, and I've come with a recommendation for tradetron from a friend of mine.
Right.
And I have a couple of quick questions before. Does this work on Zerodha also? I mean, are you linked with Zerodha or only with ICICI?
We don't. So we don't have any link with any brokers. So the way we
Yeah.
work is that we have got set of strategies that you can deploy on any broker that you want.
Any broker, right? So let's say,
Any
for
broker.
example,
Yeah.
let's say if I deploy Zerodha and whatever their charges I pay, and whatever your charges I would pay, and then and if I deploy a strategy, will it get executed automatically, or do I have to manually sit down in front of the system and do it?
Yeah, so that's where tradetron comes in. So tradetron is an automation tool, right? What it does is it will link your Demat account to a tradetron account. In tradetron, you will subscribe to a strategy and deploy it live, and the strategy will execute on its own.
Okay. And then my system doesn't need to be on. It doesn't need to be working.
Like
I can be on my work because I don't have that kind of time, but I want to deploy,
nothing like that. Nothing like that.
Okay. And every day, but the login is required the way it is required in other brokers.
Yeah.
In tradetron also, every day I'll have to log in to Zerodha or whatever broker, and then log into tradetron also.
Yeah. So that is specific to how you will react with a broker, or how the tradetron will react with a broker, because Zerodha has a TOTP, some other brokers have some other things. So I think what we can do is, Ali, if you could just drop a message on the group, my colleague Vikrant will get in touch with you. Vikrant or Samit will get in touch with you, and we'll take care of this, thing.
Yeah, really. Okay, great. I'd already dropped a message in the group. I have given a link, so I thought, let me ask you in person. But if you can guide Vikrant or somebody to get in a call, that'll be great.
Sure. So
thanks, Vishal.
There's a question. You're welcome. Yeah. And anyone else has got a question?
Vishal, there is one question in the group.
Yeah. Just 1 second.
Yeah.
Harjeet had a question, right? There was a question on the group. I'll take that question.
The question is why you have not considered theta bank nifty scalper strategy in.
Yeah, so Neeraj is there. Neeraj is coming now. I was trying to invite Neeraj to come on the webinar, so I can answer his question on the webinar rather than texting and answering this thing. So Neeraj, I hope you can hear. Yes, I'll allow you to speak. Yes, Neeraj, you can unmute yourself and speak. Hi Neeraj, you need to unmute yourself.
Am I audible?
Yes, Neeraj, you're audible.
So first of all, afternoon to everyone. And
afternoon,
I just wanted to ask that question like that about the strategy, theta magnetic scalper. So I was just observing the entire messages. So I observed that this strategy is not included everywhere. So I was strange because I have been doing paper trade for last around 1 month, right? So I'm also they took the data from the tradetron, like how it is performing. So I was very impressed for that. So but posting that messages, so I was strange here. इन्होंने इसको मतलब अपने डिटेल्स में क्यों नहीं ले रखा? So I just wanted, I need the answer for that.
Neeraj, we have some principles that if we don't have a strategy which will be live, we will not be putting on that. So we are not doing this scalper live with on a daily basis, specifically because any scalper has a specific purpose. A scalper you can't use across the days and all the days. Although yes, we have kept that as an option because people are deploying. So we wanted to make sure that the data is updated regularly and they have the visibility of it. That's why we have kept it in this thing. But we are not deploying ourselves because we have ourselves seen apart from expiry days, other days the performance is decent, or the number of trades is high, and even with a free broker you can tend to have a higher taxes. So if we compare that with our own portfolio, we realize that TMS or a TDS would give a better result, or TMS actually, not TDS. TDS has higher trades, but TMS will give a better result than a scalper, given that situation. At the same time, also there's a limitation of capital. So when we are testing many strategies, we also are limited by the capital that we can deploy. So that's why scalper you don't see, but we have the expiry version, which we are deploying regularly, and that you can see the live data of, and that's included in the reports as well.
Okay, right. So TMS stands for theta must straddle, right?
Yes.
So this is bank nifty or nifty? I mean theta.
So most of the strategies that we have will be combined for Nifty and Bank Nifty both.
Acha, okay. Okay. Understood.
Yeah.
Thank you. Actually, what happened from Monday, I was supposed to do the live trade of theta bank nifty scalper, so that's why I was
Right.
asking.
So any strategy like this, Neeraj, you need to do it with broker like Finvicia or Flat Trade or anyone
Yes,
who has a
I do
zero
have
brokerage.
flat trade. Yes, I do have flat trade.
Yeah.
So
So
especially
that
I opened that account.
Yeah, so that will work. Another reason why we also don't put this strategy is, you could have quite a bit of difference between live trade and PT data,
Exactly.
because
I
it's
do
a
understand.
scalper. So that's why we also don't put the PT data, because the PT data will be reflective.
Yes.
Yeah.
Okay, thank you so much.
Yeah. Anyone has got any more questions? Yes, sir. You can unmute yourself.
So one last question, maybe not part of these three, but where do you see TKZ and AIDs fit into this overall non-directional intraday or even directional, right? Intraday strategies. So do you have 5 in your portfolio at the end, or 6 if I
Yeah.
include the AI buying too?
Yeah. So basically, see, we are developing these other strategies that we have, and we are trying to show these strategies to you so that it should not come to you as if this is a strategy that has come in just recently. So that's one part. Another part is what we are trying to do with these strategies. Let's say TKZ will take a directional take, not on premiums or like a strike price, strike value, but it will take a directional strike basis zip, or a zip kind of a system. So that has a different dynamic altogether. AID is a very different type of intraday strategy. So what we are trying to do, I think, I explained it somewhere that sometimes, when you have similar systems, they tend to go and draw down together, and then there will be a huge issue for everyone, like what we saw with ZIP, GMP, and DIF and GIP going into drawdown at the same time. So that's why we are trying to do systems that are slightly different, and take trades in a different way. So that's where AID comes in. That's where TKZ comes in. So as of now, let these strategies prove themselves before they can come in. Then we will analyze the data, and then we will let you know that what does it fit with what. Like we have made a combo of ZIP and TMS because we believe this combo looks good and it will have a good return for you. That is what will happen with other strategies as well.
Okay, so for now, you're just sharing the data, but not, let's say, approving it for the general public to start deploying it. Is that?
Yeah, exactly. That's why we've said there's a core strategies, there are non-core strategies. Non-core strategies you are deploying at your own risk. Core strategies is what we are recommending you to deploy.
Okay. And how about TRS and all this?
So TRS is so we wanted to do a, let's say, low capital strategy. So TRS is that. It's a delta based rolling straddle. but it has a small, let's say, small target, trying to achieve that target on a regular basis. In a very volatile market of April and May, it actually did very, very well.
So it's more for the volatility side of things, and not necessarily when the market is
No,
flat.
it's more like a fixed. It's like this thing, today, if you want to come in and say that I want to risk only 1% of my capital, that's what TRS is like. It will risk 1%, 1.5%. It will make 1%. Otherwise, it is ended for the day.
And it's a single counter, is it? TRS?
Single counter. It is paired, but the pairing is based, let's say delta.
Okay, so you try to keep it parity there with the delta.
Yeah.
Is it? Okay.
Yeah.
So, but the concept you're trying to say is, as long as you have a TMS plus a TDD, you don't have to actually go look at a TRS or.
No, you don't need to look into TRS.
You don't need TRS. Okay, or TR. Okay, and TKZ is not yet ready for deployment.
TKZ is not ready. AID is not ready. AIB is not ready. These are things that we are developing. We are doing live testing of it, but it is not ready for any public to deploy.
Okay, got it. Okay, thank you.
Yeah. Anyone has got any more questions? So there were questions that were there on the form that it was submitted. I think just let me accept those questions. One second, please. So one question was, what is the combined or max SL per day? How many times it has been hit in 6 months? So we have this data combined for TDS and TMS. So that is available. Continuous loss days in row, which is also available. Combined drawdown and days required to come out of drawdown, that we will calculate and share. Day-wise P&L, it's actually available on our Excel sheet. You can see the day-wise P&L in the weekly P&L analysis. So that you can easily access, and you will see what is the average P&L, what is the sum of P&L and across, so that you can see across all strategies which are public and which is part of the core portfolio. The next is how does CDD and TDS perform in all market conditions? Which one can yield good results combined with TMS? How are these compared to positional performance? So I think Rohini had asked this question. So this is something, Rohini, that we have talked about extensively in this webinar, that TMS and zip combo can work better, or TMS and zip and combo can work better, because again it's a ratio of non-directional to directional portfolio. So if you can manage that, that will work better. And specifically on how TDS and TDD perform on different market situations. So I think all the non-directional strategies will perform 60 to 70% of the times, right? There's no strategy that will perform in all market conditions. But the combination is what we're trying to talk about. If the combination can have a higher expectancy, that means the losses will be lower than the profits. So that's what we're trying to talk about. That that will happen with a combination of strategies. So if you talk about one strategy, there's no clear answer to it. But a combination of strategies which will work across the weather you have these graphs to see. And, we don't need to say much more. These graphs are self-explanatory in that way. So with this, the questions are done. Anyone else has got any questions? Then we can do closing slide and then we can move on.
Hello, sir.
Okay, so I don't, sorry.
Sir, in aggressive combo, you have mentioned 2x ZIP plus 2x TDIS plus GMP is 1x or 2x?
1x.
Okay, fine. Thanks.
So it's basically a 60% non-directional, 40% directional portfolio.
Okay, super. Okay, thank you.
Okay, so the last slide is basically talking about the strategies that were being discussed just now. What is a theta bank nifty scalper? So it scalps for decay. It's a multi-counter strategy. It is ideal for days with good theta decay. We have an expiry version which has an average trade of 250. The target is 600 and the SL is 1000 rupees. We have a TRS, which is a always paired trades in Bank Nifty rolls basis delta. It has got hedges built in, and it is a single counter strategy. It has got 1200 target or 1500 depending upon expiry or non-expiry, and it has got a SL of 1800 rupees. Another average trades of 250. Theta ka zeta is another strategy that we are trying to develop. It starts as a paired strategy, becomes directional on zip-like signal, and it will adjust back to non-directional basis TDD kind of a signal. It is an open target strategy with SL of 5,000 rupees. It has an average trade of 400 trades. These are other strategies that we have in the Theta series. Right now, we are not focusing on them, but it was important to share what these other strategies are. And then when the time comes in, we'll also discuss about these strategies. With that, if there are no more questions, then we can end this call. A few people have joined in just now. We'll share the webinar link for them. But if you have specific questions, this is the last call to take the questions. Otherwise, we'll end this call. Okay. Thanks a lot, everyone. Have a good day. The recording will be available. We will be able to answer any more questions that you have on the group. All of us are available. Thanks a lot. Have a good day. Bye.
Yeah, thanks for wonderful session.